Hey friends, this is not a bull trap. In today's session, I'm going to tell you why, plus I'm going to give you 7 steps to ensure you know how to buy the dip safely with low risk to watch your profits grow. April tends to be a strong month, so from a seasonality standpoint, it outperforms every other month of the year, and we're in it for the big ride to the upside. So sit back, relax, enjoy today's session of Trade Your Way to Freedom. Remember, let us know how much you like it. Leave a comment, ask questions. I love answering questions about trading. Try me. So, aloha. Let's get into today's session right now. Okay, good afternoon, everybody. This is Dennis Wilburn, the AutoPilot Trader. Welcome to Trade Your Way to Freedom. It's a live webinar that we do every Friday at 11 a.m. Pacific time. Please let other people know about this, because both Anil and myself would love to have more people to talk about stocks with and share our wealth of knowledge, right, Anil?
Absolutely.
And so, Anil, welcome. Anil is the Delaware IBD meetup organizer and a good friend, and absolutely, I love the way he thinks. He's a researcher. He goes in with his triple screen system. It's very interesting to watch how his triple screen, based on the time periods, how that matches up with what I do, and it's really interesting. If you are joining us over there on the YouTube channel, please just say who you are and say hello, aloha. And if you have any questions, go ahead and answer. But it is kind of interesting, Anil, how our two systems are, while somewhat different in what we measure, oftentimes come out with the same type of results.
That's right, because basically our source list is approximately the same, so it works out great. And one other thing, I also publish weekly Delaware focus list. Anybody who wants it, just join the Delaware meetup. List is available every Sunday night.
Okay, yeah, I really encourage you to do that, guy, folks. And you just look it up on Delaware IBD meetup, and you can find it over there. See a lot of names I'm recognizing here. Hey, Ron. Hey, Jim. Love the discussion we've been having over the last little bit, Jim. I look forward to chatting with you sometime next week. Hey, Paul, how are you doing? Let's move on. We're going to be talking about a lot of good stuff today, and I'm really excited about it. But first of all, here's the overall of what we're going to be doing. Market movers for this week, trading tips, index review, and then our stock / ETF. So what are some of the big market movers that we can have this week? I think we're basically, Anil, transitioning into what they call the seasonality of the market. And what do I mean by that? Is that the seasons of the year come and go, and while each season is similar to the same type of season in years past, there's slight differences. But there is one thing that you can almost count on a regular basis, and I'll get in there and just share this little tip with you real quick. And what it is that the seasonality of the indexes. And I'm doing a little bit of research right now. Here's something I was taking a look at. This is for the past, from 2001 to 2020, 20-year period of time. And any 20-year period of time, this type of results happen. Here's the S&P, the Nasdaq, and the Russell. Take a look down here, and you see typically in the month of March, you get a little bit of low, and month of February, a little bit of slack off on the performance. But then what we should all be, I think, ecstatic about is look what's coming down the line, and that is the month of April and May. And as you can see, especially for the NASDAQ, the seasonality is that it runs up very dramatically and significantly in the months of April and May, and then it does so again. Look at what happens towards the end of the year. So what does that tell us? How do we interpret things like that? I'm going to save that and explain what that sets us up for when we get into the tip of the day. But I just wanted to be sharing that with you about, how if seasonality kicks in, which it appears it is, as if it is, then we can expect on April and May to be pretty good months. The other thing that is a seasonal thing that's going to start kicking in is the presidential cycle, and typically the year leading up into the election year can oftentimes be a very good year, and we should be able to profit from it. That's what I'm going to be looking at doing, Anil, and I'll be sharing that information, Anil, with you guys and anybody else who wants to listen, because it's a lot of good information to learn about. Did you ever look, have it broken down like this?
No, I have not. I look at seasonality on the Wall Street IO chart. But,
right.
This is good. This is for 20 years.
And again, if you're watching what's over on the YouTube, guys, hey, let me know who's over there. Give us a couple of thumbs up and all that kind of stuff. It helps drive the algorithm, and I'd really appreciate it. And so, hey, Mark Minervini has to say this: the key to success in the market is to have a plan and stick to it, even when it's uncomfortable. And we felt uncomfortable going into, I think, part of the month of March and certainly out of the month of February, but we escaped fairly unscathed, targeted return every year. Just a quick disclaimer here. And here's where that is. And this is my 11-year track record and how we've done with the AutoPilot Trading compared to the S&P. And the AutoPilot is in green. The blue is the S&P. Over the last week, it definitely helped bring my profit and loss curve up into close to the 10% that I'm looking at getting for the quarter. And so here's what we were doing as of last week. And as you can see, it popped up very nicely. We picked some really good winners in the AutoPilot Trading service this past week. Plus, we had some positions in TNA, and it went up nicely also. So it's kind of fun to watch it just go explode over just a 1 week period of time. So with that said, let's go ahead and jump over and take a look at the indexes really quick. And I'm going to be looking at the S&P. The S&P primarily. Got a really good email from one of our members who asked a question about, he was asking a question about, did I think that, what was my downside target with the S&P if it breaks out the bottom of this pennant type formation? And my answer back to him is, one, it's in determining where the downside target is, you have to have an idea of when it's going to break out. And right now, we had no idea of when it's going to break out of this lower level here. I want to be taking a look at the monthly, the weekly, and the daily charts. And this is what this represents, is the monthly on the left, weekly on the middle, and the daily on the right. As you see, in this projection down here that I did for my friend, is that this was a projection of a break of the channel, a break of the pennant to the downside. And that put me down to about that level there. And what that was measuring from that low back up to the top of the triangle, and then extending that and bringing it down to approximation of where I thought it might break out. But again, there's no indication that's where it's going to break out. What I'm looking at primarily right now, partly because the S&P is tied, its relationship with the Nasdaq. The Nasdaq is already broken out above this line here. That's very positive. We know Nasdaq is stronger in the next few months. So I'm looking for the Nasdaq to continue to run up. The other thing I wanted to throw on there for my bud was, let's take a look at the Fibonacci. What's the Fibonacci telling us about one particular downside? And so if I draw in a Fibonacci from this low to this high, that gives me a projection down. And what's interesting is this projected low took me down to the 78% or 1618% Fibonacci right in that zone. So that 3,052 a level, that's the downside projection. What I think is actually more important, and Anil, this is really what I think is really cool, is let's take it the other way to see, well, what happens if it pops out and breaks out? Where might it go? And I'll just use the same aspect, or the same 2 points for my Fibonacci. as you see, if I break out the top of this Fibonacci and break out above the downtrend line, break out that, where's my next targets? It's interesting. And I'll switch over here to the monthly chart really quick. And look, okay, there's one at 43.71, right up into past resistance or places where the sellers came in before. So that could be a zone where if we break out, that could be a zone that we slow down. Number two is the top of that. And this is the 1618 extension, 6300. And then as you can see, the 100% extension is up here, or the 200% extension just above those past highs. And so I would anticipate if we break out, prices getting up into these other areas and then starting to stall, slow down, and that's going to tell us a lot about what the heck is going on with the indexes. But I could see if this is a continuation and a strong move higher, what I can see, Anil, is this happening, is that basically we go ahead and we break out, come back up here, let's say towards the end of the year, then go into a little bit of lateral, and then move higher from there. That's a because we're still in a secular, if you will, or back into a nice bull market move. Yeah, so that's what I've got for the S&P. I won't be in as much detail on everything else, but I really wanted you to get a grasp on that. And I love the email that I received. And so if you do have a question about anything, please send me an email and ask a question. But if you're looking at a chart and say, Dennis, I see this on this particular chart, send me a drawing of the chart also, because that way we can cut right to the chase and say, okay, I know what you're looking at then. Because if you just say, hey, there's this pennant on this and this and this, and I don't know what you're looking at on your chart, it makes it more of a struggle. So let's take a look at the Nasdaq really quick. Anil, I think I've had too much coffee this morning.
Sounds interesting, though.
Okay. Let me go back to, and I'm going to stay on the again, as I said, we are into the monthly, weekly. It's the end of the month, end of the quarter. And so this is what I was talking about on the Nasdaq. We have broken out above the downtrend line and it is pushing on up. And this is a nice, strong move for a Friday. We're at close to the highs of the day for the day. Yeah, we'll see how it finishes and continue to proceed up. We can draw on we know that, let's just draw a real quick Fibonacci on this from here down to that low right there. And as you can see, we've broken out above the 78% retracement on its way up towards 100. Look for it to run into a little bit of selling pressure as it gets closer to that 13,500 level, because that's where the sellers came in before. So there's still a pocket of sellers that are hanging out right there, that once it gets up in there, they're the ones that are sitting there going, oh my gosh, if the price can only get back to, if my price can only get back to break even, I'm out of there or close to it. And that's where the sellers will pop back up to sell this back down. But the Nasdaq looking really, really strong. It is more mature in its monthly reversal than the other indexes. And what I'm talking about is the TSI has already crossed on the monthly market, on the monthly chart. The market forecast is starting to turn up very nicely. And then look what happened to MACD. MACD turned up several months ago and is looking like it may continue to work its way up. Now, even after the momentum indicators do in fact shift up to the upside, we want to target shoot any entry that we would do into like the Nasdaq, TQQ, or anything like that. We want to target shoot them on pullbacks, which we'll be talking about pullbacks very, very shortly here. And the last one is the Russell. The thing about the Russell's got a lot of catching up to do. It is at the lower part of its little initial cup area. So this is either a downside flag or a cup or a flat bottom cup, and then it'll be working up the right side. It has to, on the daily chart, as you can see, it's got to still work through the 50-day moving average, the 200-day moving average to get itself back aligned and back into a stronger uptrend than what it is right now. So it is the lagger but it also is looking positive to the upside. Really nice candlestick motion here. We had a spinning top last week, spinning top, bullish harami, and now we're getting a break up here. You could consider this to be a morning star type of candlestick, which is a reversal pattern. And so we'll look for more moving up. On the Russell, I would look for any kind of a pullback back between the 820 as an opportunity to get long the Russell. So Anil, that's what I've got on the indexes. What are your thoughts?
I got a question.
Yes, sir.
What is your thinking on why the Nasdaq is doing much better?
Because I think that it had a lot more pent up demand because it did really crappy last year, right? I mean, it was I think it wasn't the worst performing index last year, with a lot more uncertainty. And as earnings have started to come out and all that kind of stuff, and it's built up, and I think that people are finding out, well, it's not as bad as what we thought it was going to be. I think that's one of the things that's putting fuel on the fire to take it up higher.
Okay.
Lower PE stocks, good point. Lower interest rates coming down. Yep, those are all good points on that. Okay, yeah, thanks for the thumbs ups over there on the YouTube channel. Whoever you guys are, you're the mysterious six over there. And so, okay, Anil, let's go ahead and jump back over into, let me see what's next here. Hey, let's do our swing trading tip for the day. And this is one of the things I wanted to highlight to you. And this is the swing trading tip for this week is Seasonality says, be ready to play the pullbacks. And what I've highlighted here is a monthly S&P return, 1998 to 2021. It shows something similar. The average for the month of April on the S&P is also higher than the rest of the month. And so we want to be aware of that. Now, in April, the S&P doesn't quite do as well in May, but we know by looking at that other chart that the Nasdaq does. And so here's some things to remember. One, for playing pullbacks, because we are moving into a stronger uptrend, have your plan in place. Identify growth stocks with a strong long-term uptrend, trading above their 50-day and 200-day moving average. That is one of the rules that Mark Minervini uses all the time to basically make sure he's on the right side of the trade, and it'll save you a lot of angst and losses if you make sure that you're trading when the things are above the 50 and the 200. Two, identify a specific value zone price based on either the static or dynamic support, like the 8 and 20-day moving average. I love to use that for a dynamic support area. And then identify identify high probability technical reversal zones that result also in a low risk type of entry. Place a conditional order at the price you've identified in the value zone, and then look for a technical buy signal also as a confirmation when your order is triggered, because we should very quickly see a bullish type of reversal signal. And if we're already back into a big uptrend, I have no problem in fading into the moving averages, because it should, if it's behaving properly, should bounce around that area and then pop back up. Then I do the conditional orders where I place my order to buy, plus I place my order to sell, place a stop order below the recent low to limit your risk in case that the stock doesn't go the way you anticipate it to do. Max loss on that stop order is, for me, that 5%. That's my catastrophic loss. And then start taking profits when prices reach a predetermined target for swing trading. This is one of the reasons why I think so many people actually don't do as well in swing trading as they possibly could, is they fail to set a predetermined target. My first predetermined target for partial profits is 10%. Then be ready to repeat the process as long as the longer-term uptrend continues. So those are the tips for today. Let me know what you think about those tips. Matter of fact, we've been doing these tips for several months now, Anil, and I've been getting some good reports back on them that folks are enjoying getting the tips and applying them into their weekly and their monthly routines.
Oh, that is nice. Do you keep a summary book of the tips? Maybe that'll be useful for people.
Oh, okay. Well, I mean, I keep them in all my slides. And so yeah, I have a summary. And okay, hey, let's talk about the stocks. Anil stole my stock this week.
Uh-oh.
No, not really. I have been watching this one and just haven't been able to get into it. So, okay, what's the scoop on Crocs?
This stock has been doing actually really good. And on my triple screen system, it had a weekly signal way back in August of 2022, which never gone away. It's still active. But if you look at the weekly or the daily chart, it's been basically flatlining for the last couple of months. And now, while the weekly signal is active, I also got a daily signal yesterday. So that says maybe the uptrend will resume. So we'll see.
Okay. So are you going to buy it where it's at, or are you going to wait for it to pull back a little bit?
No, I think I'll probably buy it where it's at. I follow the system. So
okay,
when the signal comes, I got to take it.
Okay, excellent. So if you got a signal, take your signal and then trust your system to work out for you. I like it. So here's my stock for the day, PARR. This is from the oil patch, but it was showing us I had a pretty good signal on it a little bit earlier. Now on this one, and what I do, and you guys can see that Anil and I trade a little bit differently in our approach. And so my approach is to basically identify levels like I was talking about in that little tip of where I think it is a value area to be able to get on board with PAR. And so with PAR, since my momentum cycle looks to be about ready to shift down a little bit, I could get a pullback into the 50-day moving average, or I could get a pullback into these other areas of support that are identified here, here, and here. So that would give me a level of, and also a little bit in there, that give me a support level about right there. And what does that equate to? That equates to about 26 bucks. And so I could actually float a trade out there at about $26. And if I take out that load there, it's about a 5% stop loss. So what I would do is maybe take that down just a little bit more to 25.50, and therefore if it did take out my stop loss, it would be less than a 5%. We'll see, Jazz. I'm indicating that April is going to end lower. We'll see. I know we are getting a lot of window dressings. That's the question over on the YouTube channel. Is this rally feels like a front run of the seasonality trade for a bullish April, and it could be. Plus, we've got window dressings and all that kind of stuff as we're finishing off the quarter. So again, the charts will tell us the direction. Longer term, I'm sensing though what I'm seeing in the longer term charts is that it's due for a more significant run. We'll see. That's why we trade the charts in front of us. So Anil, what do you think about PAR?
Excellent. I'm looking at it on my system, and actually you had a weekly signal way back in May of last year, and that's that's intact and still active.
Okay.
Yesterday I got a daily signal. Sorry, not yesterday. On 27th, I get a daily signal. So maybe it's breaking out of its kind of a flat looking base right now.
Yeah, we'll see. Because it's kind of an expanding megaphone kind of base, and those can be a little bit bearish, but it's really trying. The thing that I liked about it is the run from the lows here up to approximate of the highs is about a 17% run. So if I get something that, even if it just continues to cycle, that's an excellent opportunity to just go ahead and jump on board, run. Even I can only pick up 12 to 15% of it. I would be good with that.
Looks good. Very good.
Cool. Well, then let's, again, I didn't realize I had so much to cover today. So, hey, stop making trading so hard. I struggled for years, until I developed the AutoPilot trading service. And what I struggled with this stuff, spending over 2 hours per week, finding strong trades, uncertainty about stocks. Now I spend like a couple of hours on Friday, on Saturday, Sunday, putting in my orders that I've gotten from my research. And I share that with other folks. Plus we have some live trading sessions, all that kind of stuff. So if you want to find out more about AutoPilot trading, there's the link. I will put that in the description on the YouTube channel, and also when I send out the email. And I got the figure, and basically the monthly value of what is provided with AutoPilot trading is about $1,400 worth of value in services per month. And you can take a test drive for less than $95 a month. So again, if it's something that interests you, please go ahead and check out that website link, AutoPilot Services. And we're also in the process of putting in a new website that'll be up and operational. And we also just transitioned over to a new training site. So for folks who have all our educational products going to be on there. Anil, did you get a chance to look at that new training site?
Yes, I did.
Awesome. And how was going through the modules over there? Was that pretty easy?
Yeah, that was pretty.
Well, with that, I'm going to say, hey, 2023, I think, is still a year for breakthrough and to consistent trading success. So, Anil, thank you so much. Thanks for joining us over on the YouTube channel. Thanks for letting us know who's over there. I want to say aloha, God bless to you guys over there. Aloha, trade well and prosper, and mahalo, and God bless for everybody joining us live on the Zoom meeting. Thanks for being here. So we'll see you next week. Aloha.
Thank you. Aloha.